Hello, and welcome to our April NABBW Financial Podcast. Tonight, I'm with regular guest Pam Sams to discuss a very important topic, financial spring cleaning. She's bringing us 10 steps to help assure your financial your financial life is on track. Financial life is in shape too. But by now, we're all old enough and smart enough to know that building wealth doesn't just happen. To create the kind of lifestyle that we dream about requires careful planning and disciplined work. Just as our house doesn't clean itself, we risk our money drifting into chaos. And I love this word, entropy. I had to use it. If you ignore your finances too long. So just as we spring clean our house, giving it a thorough scrubbing and getting rid of all the accumulated junk. And I've gotten rid of all the junk so many times. And then I think I've done with it. It's going to be gone forever. And then it have to do it in 6 months or something. There's just a constant junk coming into the house, but we have to do the same thing with our finances. Keep after them to keep them in the format that we want them to be. Why? You say, because over time, our needs change as we meet our short and midterm goals. Sometimes even our long-term goals need a second look to make sure that they truly represent our ideal life. That's why it's a good idea to set aside some time this spring to review your finances and make tweaks where necessary. Financial planners advise that by taking these steps once a year, you can steer your financial life where you want it to go, rather than just letting your financial life drift downstream like too many people do. And that's why Pam is here this evening. She wants to remind you that now is the time to break out your financial dustpan and set aside a part of some upcoming weekend to clean up your personal finances and do some planning. As a result, at the end of this year, you'll be in a far better financial position than you were when the year started. But I'm getting a little bit ahead of myself. So before Pam and I dive into our discussion about financial spring cleaning, let me properly introduce our call. I'm Ann Holmes, your moderator and the boomer-in-chief of the National Association of Baby Boomer Women, an organization dedicated to educating and empowering women at midlife and beyond. And with me is Pamela J. Sams, BFA, CRPC, MBA, and trusted advisor to professional women. Pam is a chartered retirement planning counselor and NABBW's retirement planning associate. An expert in personal finance, Pam is president of Jackson Sams Wealth Strategies in Herndon, Virginia, and a monthly guest who covers important information related to money and financial planning. Welcome everyone to our April 2022 financial Zoom call covering spring cleaning, with the goal of updating our financial planning, getting rid of all the cobwebs and the stuff that we don't need anymore. We're glad you joined us. Now, before we can launch into tonight's discussion, I need to do a quick audio clip just to keep us legal.
Securities offered through Securities America Incorporated, a registered broker-dealer, member FINRA SIPC. Advisory services offered through Securities America Advisors Incorporated, a SEC-registered investment advisory firm. Pamela Sams, investment advisor representative. Jackson Sams Wealth Strategies, Securities America Incorporated, and all other entities named are separate entities.
All right, that said, thanks for joining us again, Pam.
Thanks for having me once again, Ann, and I'm so excited to be sharing this particular topic for April, which is Financial Literacy Month, and whatever better time to really address the financial, basically getting your financial house spring cleaned, just like we do our own homes in this time of the year where we're throwing out stuff for the winter and preparing for summer, and this is spring is usually a good time to do that. But a lot of times people don't address their finances the same way. So tonight we'll be talking about how to really financially spring clean your house.
Excellent. We all need to hear this. And you have 10 points, Pam, that you'd like to cover tonight. And your first point is get organized by cleaning out your files. I suppose going digital, shedding and shredding old financial documents is other things that you would say comes under this cleaning out your files category.
Yeah, it's really just cleaning out all of the financial clutter. Most of us, at least I can say most of us, has probably been through tax season, unless you filed an extension. And so a lot of times people accumulate those pay stubs and all of the things accumulated for their taxes. But really making sure that if you are going to keep those, because you do need to keep them for some time to make sure, if um, God forbid you're audited or you need to have financial records, but really having an organized way to put those away in a nice file cabinet. But the financial clutter that sometimes people have, I have some clients that keep tax returns for 10, 20 years. You
Mhm.
really don't need to have those. Perhaps if you have an electronic copy, and or if you're working with an accountant, more than likely they will have a copy of that. You really don't need to keep a lot of those older documents. Same thing with your statements that you get for your 401k. You keep basically maybe the last 2 years, and then basically you shred the rest of it. So a lot of times people build up financial the clutter in their homes, just like we have bills that come in
Mhm.
on a regular basis. We get junk mail, we get a lot of things. You want to when it comes in, really make sure you have a system to file it away appropriately, and then really discard anything that's older, so you can just start fresh as well. I'm a really big proponent of if you do have it, the electronic things, of course, getting bills, I'm sorry, getting your statements electronically, and or if you are going to file those away, have a nice way to organize those in a file cabinet, maybe one of the accordion folders or a folder categorized appropriately, and then really discard all of the other things that are really old. You don't really need a lot of the documentation over 5 years for most of the
Mhm.
things that you have.
All right. Well, you're talking to me here because I have this closet here in my office that um, when we first moved in here, I started putting the box of the last year's stuff, because you're saying keep 2 or 3 years of it, but
Mhm.
I'm just realizing that there's probably 5 boxes in that closet right now. So I think you're telling me I can get rid of 2 oldest boxes.
Yeah, you can probably get rid of those, the important documents, because if you get your investment statements, for the most part, you can get access to those. The most important things you want to keep, of course, copy of your tax documents, your mortgage and or loan documents, those things that you need to have on file for historic records for
Mhm.
that. For the most part, receipts after a year, if you're a business owner and you put those away with your tax return, you probably
Mhm.
don't need to keep those for a longer period of time. Same thing with your bank statement, your credit card statements. You can get access to those online, so you really
Mhm.
don't need to keep physical copies of those in your house, which is basically, like I said, the financial clutter that you end up with. But you want those important records like the property records, the mortgage statements, your tax returns for a certain period of time. Um, the rest of the documents you can get at the ready for the most part through the
Mhm.
financial firms that you have your investment accounts with, your bank account, and all your credit card statements. You can find electronic copies of those online. And if you have access to the online access to those, you can get statements for that. So you really don't need
Mhm.
to keep the physical copies.
Great. Okay, now point number 2, create, or hopefully you've created, and so you are going to update your budget.
Yes. I always come back to the dreaded B word. Every
Mhm.
every call, if I don't do a call without the budget, something's wrong with me. But really, this is a good time we've been through the first quarter of the
Mhm.
year, get an understanding of what your expenses are this year. Now, I know a lot of people have probably experienced, because it has happened, inflation with gas
Mhm.
prices, groceries, and things like that. So you may need to do some adjusting on your budget just based on the first 3 months, and on looking at where you've been spending money and some of the increases. So, now, for example, like I said, groceries are being up. You may have spent more on
Mhm.
food than you normally would. So you may need to make some adjustments to the budget to really accommodate or compensate for the increase in certain categories.
Mhm.
That's where you start to look at, are there things that are not serving me anymore? Do I look at some of the everybody has a streaming service these days? You think back to the days, and where you had cable and it was supposed to make it very simple because everything
Mhm.
came in a
Right.
package and you pay one price, but now everybody has a streaming service and you think you need all of it. Really just figure out which ones you are using. I am notorious for it because I have children. I mean, they're not younger,
Mhm.
but they'll want, the Disneys, and they'll want the Discoveries, and they'll want a lot of these different things. You just really need to figure out which shows are the ones you're going to watch the most, and then keep those streaming services that you want to keep, that you look at. So
Mhm.
those are some things in your budget you want to look at, some categories. The number one culprit for most people's budget is food and dining out.
Mhm.
We are a society of get it quick, get it easy. We have so many delivery services for food now, and those add up with, of course, the cost of buying it, but you have delivery fees, you have the
Mhm.
service charges, you have a lot of those. So if those are areas that you are overspending on, this may be a time to kind of do that spring cleaning and say, do I really need to? Or are there areas that I could cut out? Maybe do some of these delivery services at some point, but see where you can perhaps free up some cash flow on a month-to-month basis by eating out less if you can.
Mhm. All right. Well, I know that I read on my phone the other day about a new series that was coming out that was about Martha Mitchell. And I
Mm,
was thinking, oh, I so remember Martha Mitchell when the Nixon thing was going on. And I
yes.
might be fascinated to watch this little 6-part thing on Martha, however many, it
Mhm,
is a mini series on Martha Mitchell. But then it was on Showtime or something that I
yes.
don't get. And so I'm
Hmm.
thinking, oh, well then, no, I don't think I'm gonna be able to
Yeah.
watch Martha because I don't want to add another.
Hmm.
I've got enough streaming services, even though I don't have any older kids like you're talking about.
Yeah,
So,
exactly. And I know a lot of times the thing is that they'll make it very easy. Like a lot of them are 6.99, 7.99. It doesn't seem like it's a whole lot, but over a course of a year, uh, same thing with either magazine subscriptions or stuff that you buy. I am really notorious for music streaming services because I love music. And so I'll have a variety of them, and then it's just maybe 9.99, and then next
mhm,
thing you know, over the course of the year, you've spent a few $100s just streaming music, and sometimes you're not even using all of them. So making some educated decisions: do you want to keep things? Do you want to eliminate it? I always suggest people to look at the broader picture. Like I said, with a 9.99, $10 a month times 12, that's $120 a year. What can I translate that to if I was to able maybe to put that into an IRA or some other type of investment or pay down debt? So you really just translate it to something that you could utilize to further your goals versus
mhm,
something that you may or may not be using on a consistent basis.
excellent. Point number 3, I believe you said automate as much as you can.
Hmm.
And I think I've read recently that not only can I automate my bills, which I've pretty much done, but
Hmm.
savings and investments can be automated too. So
Yeah,
I don't
yeah,
I don't know if people
exactly.
think about that, but
I don't think they as much as they should. But when I put that point down there, I was thinking mostly bills. But yes, you can do the automation for your investments. But to automate your bills is really, are there ways that you can um, pay your bills electronically, uh, coming from your bank account or your paycheck or however you want to do that. I know it gives up control for a lot of people
mhm,
because, I have this same conversation with clients. They don't like a lot of stuff coming out automatically because they're not in control of when that occurs. And they are fearful that they may not have enough resources to cover those. But that's the same thing. You estimate with your bills how much you're bringing in, into the household, your cash flow, your so inflows and outflows. For the most part, you should be able to automate most of your bills. Now, some of the larger ones may be a little bit scary, like your mortgage or your car note, things like that.
Mhm.
But there's a way to really just take a look at when you get paid per month, which bills are going to come out for the particular month or day. So if you get paid twice a month, what bills are going to come out of the first paycheck, what bills are going to come out of the second, and then really try to make sure you automate efficiently so you're not overdrafting and you have enough resources in there. But for the most part, that way you're not missing bills or you're not doing that. I don't think a whole lot of people are actually mailing bills these days. I mean, I was in the post office for the first time getting my passports renewed probably in the last maybe 4 years. Now
Mhm.
I know COVID had something to do with it that I wasn't there, but I don't have to go to the post office. I buy stamps someplace, and if I occasionally need to use it, I'll use the stamps for that. But for the most part, I don't think people are actually physically mailing out bills. But if you are,
Mhm.
consider automating because
Mhm.
this way you won't forget any of them. That's
Right.
the thing. Sometimes you may end up skipping a bill because it wasn't in the rotation and you didn't get it mailed out. I had a client, she's old school. She likes to mail out bills. Unfortunately, she missed one and it put a little bit of a ding on her credit report because it was a credit card. She mailed it out, but that was the time period and where who knows what was going on with the mail system. So it was a little bit of a lag,
Mhm.
so the bill did not get there in time enough to be credited for that particular month, which made it over the 30 days. And unfortunately, it put a little bit of a ding on her credit report. So if you can automate your bills, that's probably the best way to do it so you don't forget and or have to rely on the mail system to get it there and document it properly on
Mhm.
time.
Yes, it's really makes sense to automate your your bills that come out, on a monthly basis. It's just such a time saver. But then, of course, there are those bills that we don't have on a regular basis. So,
Yeah, those are the tricky ones. So maybe I think I mentioned before in a previous call, having that financial calendar. So
mhm.
if you have, when, like most of the utilities, maybe like the water or things like that, that may come out quarterly, just knowing where they are on the financial
Mhm.
calendar, that's going to be due. Maybe an IRA contribution if you do the entire amount by April 15th when you want to put that in as well.
Mhm.
If you do automate it, if you automate the transaction, I generally suggest if you're going to do automation of your investing, try to put something away monthly into maybe either a brokerage account or if you're doing an IRA to decide if you want to make the full contribution and then basically divide that by 12 and then that's how much you would pay in monthly. That way you don't forget to make your IRA contribution and you're basically dollar cost averaging throughout the year.
Mhm.
So you're buying high, and you're buying more shares when the prices are down. So the dollar cost averaging piece of that helps out versus making the lump sum at the end as well. And it gives you an opportunity, like I said, to consistently invest. So it's automated, it's going in, it's either going to an investment account, it's going to an IRA, it's going to maybe a 529 for kids. It's the same thing with your bills. You just know it's going out and it's working on your behalf in an account.
All right. Well, point number 4, start an emergency fund.
Yes. So cash reserve is always key.
Mhm.
3 to 6 months worth of living expenses is ideal for cash reserve. But I always say, that may be a larger number for some people. So start where you are. I would always say how to eat an elephant one bite at a time. So if you have a bigger savings goal, can you put away something on a consistent basis? Just like our previous conversation with automating, maybe you put a certain amount of your paycheck out each particular paycheck, $50, $100, whatever it is, into a a savings or emergency fund to build that up on a consistent basis, and try not to touch it if you can.
Mhm.
So if you have it going from one spot to another, especially if you are working, the employer could do that for you. You can do a direct deposit out of your paycheck where it goes automatically into a savings account. That way, it's got your check. You don't miss it. It doesn't hit your checking account. It goes straight to the savings, and then that way you may not be tempted to tap
Mhm.
into that. I always suggest trying to keep it into a another institution that you really don't have access to a lot. Online banks are really good for that, because you would have to make it's like a two-part situation where, let's say, if you had your main bank, it works as a conduit to another
Mhm.
bank. So it really makes sure, and then it gives you a period of time to get it back, usually
Mhm.
within a 48-hour period. So it takes some work to get to your money. And then if you see it, it's kind of a set it and forget it. If you're able to do the payroll deduction, have it go to one, maybe an online bank, it's out of your regular checking account, so you don't see it, but it is building up on the side for that emergency fund.
Mhm. Is there an ideal optimal amount that you think we should aim for our emergency fund? Is it like 1 month of or 6 months of
Yeah, and like I
expenses?
said, at minimum try to do at least three.
Hmm.
If you have a more consistent job, then maybe the three. If you're a little bit more where your job is a little iffy, 6 to 12 months, because
Hmm.
that way, if you are at a loss and you end up becoming either furloughed or displaced for some reason, you have enough to sustain yourself for at least a 6 month period before you find another job, or a 12-month period. I know I have a lot of contractors in the DC metro area as clients. At any point, the contract could not be renewed, and then next
Hmm.
thing you know, they're looking for another job or waiting for a new contract. And so
Right.
I suggest those clients keep a larger amount of cash reserve so they don't have to worry about being displaced for a longer period of time and not having the cash flow to pay for the day-to-day expenses.
Well, that makes sense. I remember Steve, my husband, when I first was married to him, he was working for a university system,
Mhm.
and their process was to pink slip everybody at the end of the year. Now,
Mm,
you were probably going to get
yeah.
rehired, but you didn't
Mhm.
know for sure. Concept of being pink slipped is kind of like,
It is very scary.
right, yes. So we had to learn to live with the part of him telling me it's going to be all fine because I was the new wife and I was
Mhm.
freaking out over the lack of
I know of
uh,
that, and he's probably like, this happens all the
right, yeah,
time. It'll
right,
be
yes,
okay." And you're like,
right,
"Wait, well, we just got together. Are you
right,
sure?"
right, yes. All right, well, point number 5 on your list is prioritize debt.
Yes, I always talk about debt and debt reduction. So
Hmm.
here we are again, like I said, at the end of the quarter. Usually, the first part of the year, people are dealing with probably an increase in credit card debt due to holidays. At that point, you should have probably prioritized how you want to pay down debt in the most efficient manner. There's a couple of ways that I think I've mentioned before, but I'll go over those again. One is a snowball, where you're basically paying down debt with the smallest amount, and then you basically put the debt after you paid off that into the next debt, into the next debt. That's why it's called the snowball, or the reverse of that, which is the avalanche, which you basically pay down the um, credit cards with the largest interest rate. A lot of times people like to do that. Of course, you'll save money in interest, but sometimes those balances tend to be a little bit larger, and you don't see much of a movement, and you lose a little bit of momentum or motivation for that one. That's why I try to tell people, depending on which way you do it, both are efficient methods, but the snowball gives you a little bit more motivation because you can see that those smaller balances being chipped off a little bit more efficiently as well. So either way, that's how you would prioritize which debt to pay down first.
Mhm.
There's a lot of things online, snowball calculators, avalanche calculators, and then what you would do is basically plug in all of your debts in there, including your mortgage if you want to. I know a lot of people do all of the credit cards, they'll put anything that they have to pay loans, their mortgage, car notes, all of those, just to kind of see how long it would take to pay those particular obligations down. If
Mhm.
you just want to focus on your credit cards, you can do it the same way. But there's a lot of Excel based calculators online for you to make your own particular snowball, and you can put in your debts and it'll tell you the priority on how to pay them down in the most efficient manner. So that's a way to really look at it from an automated, again,
Mhm.
a standpoint, to know exactly what bill gets what particular debt gets what on a monthly basis, and then it'll also tell you how quickly you would pay that off. I did that same exercise with a client last month. Is that, she had a bigger bill or a bigger credit card bill, and that's like if you just put on, maybe it's called an accelerator margin. So instead of, I have a lot of people who just throw money at it. Oh, I sent an extra $50, or I spent an extra 25 to a card. You really want to be strategic with it. So doing the calculator with having an accelerator margin, so maybe it's an extra $100 that you can put on your debt monthly. It'll show you which ones that you need to put the extra 100 down, not split it up. Put
Mhm.
that one on the larger, or the one that you're prioritizing, to see how efficiently that would be paid off. So it does start with a little bit of an accelerator margin. That's why, going back to our conversation about the budget, if you're able to free some cash flow up, finding an extra 100, maybe $200 to use as an accelerator margin when you're prioritizing your debt to pay it down efficiently, you can see how that could speed that snowball up a little bit more efficiently by just squeezing out a little bit more out of your budget to redirect to prioritizing your debt.
Excellent. Point number 6, control your credit.
Yes, back to, just like prioritizing your debt, checking your credit report and making sure you know what's on there. Now, I'm a part of a program through AARP as well. It's called Scam. It was called Scam Jam. That was actually a few weeks ago, and it talked about now, especially during COVID in the last couple of years, people are out there. They're really, really being strategic about um, scamming people.
Mhm.
Unfortunately, you would figure people would have better use of their time, but they don't. So sometimes people have whole credit reports or whole credit line of credit out in somebody else's name. Is the identity theft is really huge part of that, and AARP has done a really tremendous job with trying to identify, make that a priority, and identify the scams that are out there as it relates to that. So if you don't check your credit report, next thing you know, you go try to apply for credit on your own, and then you
Mhm.
find out there's such erroneous information on there that somebody has stolen your identity. They've opened up several lines of credit cards, and you wonder why you're not able to get debt. So, and then that's a huge part of, really, and I believe we had this conversation as well, and is that you had experienced that and had some things on your credit report that you weren't even aware of because you hadn't checked it.
Mhm.
The same thing with, I deal with a lot of divorced women still having old debts that are on there from your ex-spouse, or your ex-spouse has information and they may open up credit on you as well because they have your social and they have a lot of
Mhm.
things that, so you need to be very meticulous when you look at keeping track of your credit and what's on your credit report. That's kind of the bottom line. I always tell people to at least pull your credit report. You're allowed, based on the credit bureaus, one credit report per year from each of the three credit bureaus: TransUnion, Equifax, Experian, and it's free. It's called annualcreditreport.com. Don't go to the other one, the freecreditreport.com. It's a whole thing that they try to make you buy a subscription to. You don't need that. Annual credit report that will show you what's on your credit report. It's not going to give you the scores. Unfortunately, the scores they kind of hold those tight and they require you to pay for those.
Mhm.
Some of the credit cards are actually providing that feature as well. I know a lot
Mhm.
of the major credit cards will allow like a credit journey through Trade to Chase and Credit Wise through Capital One. You can where you may be able to get one particular credit score. Your credit scores are unfortunately there's not like a bottom line foundation for all of them. So one credit report could, I mean, one credit score could be different at TransUnion versus Experian. That really depends on how they're calculating the score, but then also what's on the report. So some things may not be reporting to all three credit bureau reports.
Mhm.
So you that's the thing that you need to be aware of is what's on each of those credit reports. That's why the annualcreditreport.com is very important. So you know how they're generating your credit score on TransUnion versus Experian because some of the things may not be represented on
Right.
that particular credit report. So you want to make sure you know what's on there. If there are erroneous information, you can always do a dispute
Mhm.
on that. You contact the credit
Right.
bureau directly, and you make sure you dispute that within a 30-day window. They have to get back to you either they've removed it and or it's valid. So it may be something that, and I'm really glad to hear, I did read recently that they were allowing a little bit longer time horizon for medical bills not to be not to appear in your credit report because they've been notorious for turning them over to collection really quickly. It ends up in your credit report and you have no idea that it's on there because you had been working with the insurance company to get it paid, but the next thing you know, the medical facility has turned it over to the credit bureau collection agency,
Mhm.
and now it's on your credit report, and you may not have had a clue that it's on there until it pops up as a collection. So they are given a little bit more grace in that instance, but the bottom line or the I guess the name of the game is know what's on your credit report, know what your score is, because you never know when you would need to be extended credit, and you want to know where you stand before you go in because each time they run your credit, it is a little bit, I wouldn't say a ding, but you don't want to go out requesting credit for a lot of different places because it does hurt you.
Mhm.
So knowing that before you go to ask for credit, know that what your credit score is, that your credit report is clean, that it doesn't have any collections or erroneous information on there. So this would be a good time to do that during the spring cleaning project.
All right. And yes, you are correct that it was a situation that happened to me when I got divorced,
Hmm.
and I was so naive back then that, it never occurred to me that there was a problem. I just thought, well, I know my income isn't what it was when I was married because it's a single person income, not a couple income. So, it took me the longest time before I wised up that um, I think I went to a bank to see if I could get a loan, and that's when they said you need to look at your credit report, and that's when I said, this is not right. So I could have saved myself so much grief if
Hmm.
I had been knowledgeable about how to handle that. So
Yeah,
you're
and that happens. A lot of young people really don't kind of understand how that works. And like you said, especially after divorce, that's how I work with a lot of divorced women. Is really make sure you do review it because there's certain things that you have agreed to in your
Mhm.
divorce decree that will be either be paid off or eliminated or dumped. Either you're going to keep both or something will fall off. So you have to kind of track that closely to make sure things are in agreement to what was in the actual decree.
Mhm.
So keeping on top of it a little bit more going through a divorce.
Excellent. Point number 7 is, I think, just as big as important as any of the other ones you've covered so far, but they're all important. But this one is
Mhm.
review your financial documents, including health and life insurance policies.
Yes. What I run into a lot of times with life policies and health policies, it's a set it and forget it sometimes. We buy them, we put them into to the safe deposit box, or we just file them away and we don't revisit them. Not to
Mhm.
say that you're going to replace or you're going to do anything differently, but you want to know what it looks like. Same thing with your benefits through work. I mean, you had open enrollment for the most part. For most people would have had it towards the end of the year. And of course, you probably won't be able to do anything with it until maybe towards the end of this year, but it's a good time to assess, did things occur in the last, let's say, few months.
Mhm.
Maybe you went through a divorce, or maybe you had a child, or maybe you did something a little bit different. Sometimes these life events will also open up, if you have, for example, employee benefits, a special enrollment where they say it's a kind of a special situation where you may need to add a child, or you may need to take off a spouse if you got
Mhm.
divorced. So these are the times that you want to kind of do the spring cleaning on policies, because you may need to either take somebody off, add somebody on, review your coverage for all of your policies, your life policies, your auto policies, health insurance as well, your flexible savings accounts and your health savings accounts as well. This is a good time to reassess with that. Also, beneficiaries. So if you went
Mhm.
through a divorce, uh, do you still want? Of course, you probably not.
Mhm.
Your spouse on there as your beneficiary. So you need to
Right.
go and update the life insurance company with who's going to be your new beneficiary. You also want to make sure you put contingent beneficiaries on there. That's what I've seen a lot lately, is that you have a primary beneficiary, but let's say something happens to that primary beneficiary. Something happens to you, of course, but then something happens to that
Mhm.
primary beneficiary. It goes straight to your estate and it has to go through probate and a lot of things. Versus if you have a contingent beneficiary listed, then that's the next person in line. So think of it kind of as a succession part
Mhm.
for your life insurance. So try to name your primary, but also add contingent beneficiaries to your policies as well. It may also be a good time to address coverage. So, like I said,
Mhm.
if you end up adding, children, or you adopted children, or you did something differently, this would be a good time to assess how much life insurance do you need. There's a couple of different ways to take a look at it. There's kind of a needs-based analysis. One's a human life value. So if you, whatever your salary is times the amount of years that you would have lived to retirement, that's a
Mhm.
whole different calculation. So really looking at your life insurance needs, are they still where they need to be based on your life events that have occurred? Same thing with health insurance. A lot of times, maybe this time of the year during first quarter, you may have had several visits. Are the copays still comfortable for you, or
Mhm.
the deductibles still comfortable for you? A lot of companies are reassessing on, not probably now, but probably towards the end of the year during open enrollment, the deductibles that are
Mhm.
there. Deductibles are actually increasing. So the policies that you do have, are you still able to afford the deductibles? Does it still make sense for you? Same thing with auto insurance. I just
Mhm.
recently talked with a client about, her auto insurance seemed a little bit high, and I was like, what was going on? She was like, oh, my deductible was 150 or 200. I said, how many times have you had an accident in the last 5 years? Not to say that I'm property casualty, but these are some things that I
Mhm.
address with clients, to tell them to go to their property and casualty agent to take an assessment of it. But she hadn't, had an accident in quite some time. Maybe, raising the deductible would lower her premium, and she ended up, doing that. Went to her agent and was able to lower her premium just based on increasing her deductible a little bit. So those are some things you want to take an assessment on
Mhm.
with your coverages on your life policies, your health policies, disability, any of the insurance programs that you have, part of that whole spring cleaning, just to make sure everything is still in alignment, it's still serving you properly, or do you need to make some adjustments?
Excellent. And now there's one other thing that I came to my mind as you're talking about
Hmm.
that. Reviewing a document is my will, because I remember
Mhm.
years ago being so surprised because Steve and I had written our wills when the kids were, when we got married, and the kids
Mhm.
were like 5 and 8. So there was contingencies in the will for who would care for them if something happened and we both died.
Yeah.
So
Mhm.
now I'm looking at this and my children are in their 30s and it still says in my will who's going to care for them if I die.
Exactly.
And so I'm thinking, well, this is just ridiculous. I mean, I really need to update
Mhm.
my will document because it's not serving me at this point the way that.
Exactly. And that's one of those documents, like you said, people, of course, you're not going to do it every year. It's kind of a set it and forget it. But that's where you would, like you said, especially as your children start to age, at the age of majority for most states are 18 or maybe
Mhm.
21. After they've reached that age, then you don't need the guardianship
Right.
situation anymore in your will. You want to go through and just refresh or update those particular documents as well. I had to go through that. Unfortunately, I lost a client a few years back. Executing his will was quite a challenge because there were people named in there. He had a pet trust, which was beautiful because he had birds to be taken care of. But the people he listed on there to take care of their birds necessarily weren't being able to be found and/or decided they did not want the birds. So it was a whole big old to do on some things to go through and execute the will properly from there. But that's where you want to start taking a look at it. He had also changed states during that time period, and unfortunately, we did not get a chance to reassess before he had passed away. So we had two different states that we were dealing with as well. So
Mhm.
refreshing your documents when you have those life changes. So I think the moral of the story is whenever you have life changes or life events, it's really a good time to review your important documents, your wills, your life insurance policies, any of your policies that you have to do with your mortgage
Mhm.
deductions, all of those things whenever you have those life events.
Perfect. I'm glad that we added that in there because otherwise we might not ever think about it.
Yeah. Mhm.
So point number 8, create a personal binder to help you stop clutter before it starts.
Yes. So if you're going to go old school and keep documents and not electronically, but even if you do electronic, having a file system.
Mhm.
So for me, I have kind of one document that says, kind of personal finances, and each of those insurances, investments, banking, all of those, you would still have kind of a subset of those if you're going to keep electronic copies inside of there. But if you have a personal binder, that's kind of where you want to do the same thing with tabs. You'll have things for your mortgage, you'll have things
Mhm.
for your investment statements, you'll have categories inside of kind of a binder. And again, you don't want to keep a whole lot of financial clutter. So once things get old or get stale, then you want to kind of delete and shred those documents and keep the fresh stuff in there in the
Mhm.
personal binder. So that's, like I said, if you go old school and you keep that, really keeping a couple of different binders. I know one client told me I have a whole drawer in her house where she just keeps my stuff. And I said, you really don't need to keep everything. I told you about the financial clutter. She just likes paper. She likes tangible to see the numbers.
Mhm.
So she has a whole drawer that's dedicated to me. So, but if you do it that way, just make sure same thing in the beginning of our conversation with files, make sure you have an organized system, nice file folders, accordion folders, some nice tabs, so you can get things at the ready, so you're not
Mhm.
digging through and find out where last year's tax returns are, or 2 years tax returns. Know where there's tax documents, there's investment documents, there's my estate plan, that you have them all in one spot.
All right. Point number 9, invest in your future.
Yes. As always, we have financial goals and what you want to achieve in life. So really making sure you plan accordingly for your future. Retirement planning is one. making sure you invest enough into your retirement plans, either your employer sponsor plans, IRAs, Roth IRAs. And what does that really look like? This I always tell people during kind of the spring cleaning, but then also mid-year, and then also towards the end of the year. We always do our kind of what do you need to do at the end of the year call. It's the same thing towards the assessment of where are we,
Mhm,
especially since we had quite a rough ride,
mhm.
volatility wise in terms of the investments. So this would be a good time after the end of the quarter, which just finished. Take an assessment of what occurred in your accounts. How far are you off from your original savings program, and are you still on track for saving for your future? This would be a good time to take a look at that, discuss that with your financial advisor if you have one, just to see what the lay of the land looks like, since we had a little bit of a rough ride. And we may have a continued rough ride for a while as we deal with some of the geopolitical situation that's going on in around the world.
Mhm.
So how is that going to impact you? Maybe you need to do something differently with your asset allocation, or um, taking a look at maybe reducing your risk a little bit. So that's where this would be a good time to reassess what that looks like, discuss it with your financial professional, and make the adjustments accordingly.
Excellent. And point number 10, review and refine your financial goals.
Yeah, this would be the time where you're really looking at um, setting your goals, reassessing. I mean, towards the end of the beginning of the
Mhm,
year, everybody had New Year's resolutions and what those are. So you want to take a look at, are they still holding true? Of course, we're
mhm,
only at the end of the first quarter into the beginning of the second one. Is that looking at what your goals are. So I do that with my clients all the time. Looking at the goal list. Is this still a priority? Is this still on the goal list? Are you reassessing? Maybe it's a home improvement project that you're going to table for a while. Maybe it's some things that come off, but go on. So this is where you're looking at that as well. With the Probably with the spring cleaning with your home, I have a lot of
mhm,
people who are probably going to be doing projects, fences, and decks, and all of that
mhm,
as we start going into our warmer summer months. Those could be goals that you need to take a look at, and then make sure you have a time horizon and also a game plan on how you're
mhm.
going to accomplish those goals as well.
Excellent. Now, back in February, you recommended that couples plan a financial date night periodically.
Yes.
Now that
Mhm.
we're potentially talking about taking some bigger steps, do you have any advice on how to make sure that we will actually make time to do the financial spring cleaning?
Yeah, it probably can be incorporated with the financial date nights if you do that. But just like you would do anything, like you mentioned before, the kind of the dustpan, we
Hmm.
have times where we do our spring cleaning where we're cleaning out the garage, or we're cleaning out our closets, or we're donating things like that. It would be the same thing for dedicating maybe a weekend to do some of these particular action items on the tip list for financial spring cleaning. But it is important to set aside time to do so as well. I know when my clients start kind of doing this, I get a little bit more phone calls or documentation or emails on, hey, I just went through that one, exercise you told me, and I found some things, or I need to reassess. Let's make an appointment, so I can start to see where people are starting to do these things or setting
Hmm.
aside time to take a look at it as well. That's where you want to make sure you have a dedicated time to do this project.
All right. Well, any other advice that you'd like to add? We've got a few more minutes here in the call, so
Yeah.
anything?
So, some tips that I did want to kind of talk about is backup things, electronic copies. Of
Hmm.
course, you want to disregard papers if you do have electronic copies that I mentioned before. Don't throw those away. Make sure you shred those. Like I said, The scammers are out there. And unfortunately, you think you throw it away. People are digging through trash, unfortunately, and they're finding documents and they're stealing people's identity. Make sure anything that's important, document, shred them instead of just kind of throwing it out into the trash.
Mhm.
So those are some things there. If you're able, make sure you have larger payments for towards your debt. I know a lot of people are getting tax refunds now. It may be a little bit slower now because of the process, and IRS is a little bit short staffed. And so I know from a couple of accounting friends that they said that things may be a little bit behind with their
Mhm.
tax refunds. But what you want to do is that if you do have a larger tax refund, really making sure you kind of utilize it where it needs to be taken care of. Do you need to, look at your goal list again? Do you need to fund cash reserve? So maybe
Mhm.
putting some towards that. Do you need to pay down debt? Maybe making a little bit larger payment to accelerate put on the accelerator margin to pay down debt. Do you put it on one of the projects that you have, a home
Mhm.
improvement project? So make sure you utilize the the refund to the fullest. I know a lot of times
Mhm.
people see big checks and then the next thing they know, they're out shopping. I have a lot
Right.
of clients who love retail therapy, so they're out there buying things. But this is a good assessment on what do I need to do now with
Mhm.
this particular, let's say $4,000 or $5,000. How could I best utilize that towards my financial goals? Putting some away for the future, paying down debt, putting some for cash reserve, things like that. That's where you want to make sure you take an assessment. If you're going to clear out the physical clutter out of your house, consider maybe selling things for cash. I think we've mentioned before in previous phone calls, taking a look at maybe getting a little bit of cash out of things. There's so many apps out there that I think is Shop Your Closet and
Mhm.
other stuff like that. As you start doing that, actually, I was on an interview a couple of last month. A fashionista had told me to talk a little bit about financial planning as it relates to fashion because she does that and she helps people clean out their closet. And she was telling people they can use, Poshmark and they can use a lot of these other things and they can make a little bit extra cash that way by just cleaning out your
Mhm.
closet or some of the things that we have people have so many extra phones or electronic equipment and things like that. You may be able to get a little bit of extra from a resale on
Mhm.
that. As you start to physically clean out your house, make a little bit of extra cash in that. One of the other things I wanted to talk about was closing accounts that you're not using, not the credit card accounts. I don't want you to close those because they can have a negative effect on your credit. You don't want to do that. This would be, old bank accounts. Some people have bank accounts, they only have, $5 in there, $6
Mhm.
or whatever. If you're not using those, then just close those out. Don't do the credit card accounts though. I
Mhm.
get that a lot. Um, because basically, if you close out credit card accounts, it hurts your credit. You're erasing that whole history on that credit card. So I don't want you to close out those accounts. But these are extra accounts that you don't have. You may have um, old bank accounts or old money market accounts or things like that. Now, this time of the year is also when CDs are generally due. Do
Mhm.
you roll over the CD at the new interest rate? Sometimes you get a teaser rate at the beginning. You get a really good rate for your CD, but now it's renewed and interest rates they're creeping up a little bit, but you may not get as much as you had when you first got that particular CD? Do you do something different with it? Do you reassess? Do you put it in money market? Do you put it someplace in investments? So take an assessment of where your CDs are towards this time of the year as well, and then close those accounts accordingly as well.
Mhm.
So those are some extra tips that I think people can utilize as they start to spring clean. Of course, it's always about being as efficient as possible with your finances. Set aside the proper time to do this because it does take. We went over basically 10 different things to
Right.
do as it relates to your spring cleaning. So just like your regular house spring cleaning, that takes time. This is going to take time as well. So make sure you set aside the proper time to do that. And if you do need help, of course, consult your financial professionals, then they'll be able to walk you through some of these things efficiently.
Very good. Well, thank you, Pam. As usual, you've given us excellent advice. It's been great talking to you. And I
Mhm.
appreciate you being my guest and providing us with this excellent checklist to help us freshen up our financial plans. And I
Yes.
think what I'm hearing you saying is you don't have to do all 10 of them. You could start with a couple of them and
Yes. hmm Yeah, exactly. You don't have to, bite off the whole thing if you want
that
to
elephant,
take
the thing.
you don't have to, but yeah, just one
Right,
bite at a time to do that. Like I said,
right.
sometimes, especially like I said, now people are getting tax returns. One question I get a lot of times is, what do I do with this now? Do I pay down the debt or do I, invest it or do I do something different? And then that comes down to what are your goals? What are we prioritizing? And what's the most efficient way to utilize that particular chunk
Mhm.
as well? So that could be something as people are starting to get their tax returns, capturing as much as possible. Hopefully you're not, going out and having a whole shopping spree on it, but take a pause and see how you can most efficiently move that forward, either for your financial goals or paying down debt as well.
Mhm. It really is important that we take time to annually do this financial spring cleaning. We all need
Mhm.
a reason to go through everything and I guess we could say sweep out old spending habits, dust off our budget, catch up
Mhm.
on late payments, toss out the debt if, as you've been talking a lot about the debt and planning for our future. So I thank you for
Mhm.
reminding us of the fact that spring cleaning is not just for our homes, but for our finances as well.
Yes.
Now, you and I haven't talked about scheduling for our next month, but uh, normally we have our call on the fourth Thursday of the
Mhm.
month, which will be the 26th of May
Mhm.
in next month and at the
Yep.
same time and location. So all of our audience listening, please note that on your calendars because I can't tell you yet what our topic for May will be. Maybe Pam has some ideas, but she and I probably have to talk about it. But
Mhm.
anyway, we will be back on the 26th of May and we hope to see you then. So thank you, Pam, and thank you,
Yeah.
audience. Um, and I want to tell the audience, thanks for joining us again for this great call with Pam. If you have questions after the call, you can feel free to email them to Pam at Pamela@jacksonsams.com or go to her website at www.jacksonsams.com. And if you'd like to know more about the National Association of Baby Boomer Women, check out our website at nabbw.com and our Facebook page at facebook.com/nabbw. Thanks everyone for joining us tonight. Thank you, Pam,
Okay.
and,
Thank you.
and good night.
Good night.